This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, which means that we've got a weekend coming up and we've got a holiday coming up the Monday after. I think Tuesday is a holiday, but advertising it right here this morning. Well, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Surbi. Guys, hi, morning.
Hi, good morning, Prashant. Morning, Surbi.
Friday never felt better. I can't just wait for the day to end already.
I think Surbi needed the weekend, right? More than any of us.
I heard Surbi's a deep sigh before we started, and I said I should mention that we have a holiday coming.
Thank you so much, Prashant. That really made a difference. I didn't know that. I didn't think of that.
But you know what? I don't know how you guys feel, but generally, Ganpati on the holiday that you get, you're just going from one relative's house to the other, which is of course great. I mean, it's festive season that begins, but it's not really a holiday if you think of it, right? There's so much to do.
At least we won't have to track the mid-cap index hitting fresh all-time highs. At least we'll get a break from that.
Well, I think, there's a clue right there. So let's just actually quickly start by telling you what you need to know as we begin another session. So, the mid-cap and small-cap part of the market, that continues its repair. Why do I say repair? Because, of course, earlier this week, 2 days back, we had that mayhem. But every day, the last 2 days after that session, there has been upmove and strong upmove, both in the mid and small cap indices. The indices, by the way, once again ended between 1 and 1.5% higher. And that is basically what the focus has been. The Nifty, Bank Nifty, they did not correct that day, that 3-4% cut. And they have done well, but yesterday, for example, many were expecting there's going to be a super day, but it was not. It was a higher session, but more or less flat, nothing large. Now, the big negative from overnight is the fact that oil prices have risen. They've risen 2.5%. We are now past the $94 per barrel mark, right? So that's the big one, and that's the big worry as well. So far, markets have completely ignored it. But it's the single largest item of import for the country. Many are saying, well, we've been paying very high prices at the pump, but the point is for the overall macros of the country, deficits, etc., this is a big item. And it does, of course, feed through in terms of the imbalance there. So I think important to watch, but these are very high levels now. U.S. equities, though, they ended higher. We are about 1% up on the S&P, similar on the Nasdaq as well. The dollar index also moved up strongly. Actually, in the last two sessions, the dollar index has gained about 1%. 105.41 is where the dollar index is now, last night settled at. U.S. data came through hawkish. You had three sets of data: retail sales, jobless claims, and producer price numbers. And all actually were strong, which means that now, although markets are expecting a pause, next week when the Fed meets, they are expecting that, in the dot plots, there perhaps will be one more rate hike sometime later this year. In a way, we got something similar from the ECB yesterday. We got a hike. But that's the ECB's hike for 10 straight times now. But in the press conference, there was some indication that they're perhaps not done, although the market seems to believe that we'll get a pause now. For the Nifty, just to come back and tie all of this in terms of levels, we've been putting out the level of 20,350, and I think we remain on track for that. That's a very near-term level which, not level, but it's a kind of a target to watch out for. Near-term supports come in at about 19,934. The short-term moving averages have all been left behind with the pace of the move, the 10, 20, 50, etc. So the nearest that the support comes in at about 19,930. Bank Nifty, it already has touched the weekly upper Bollinger Band with the move that we've seen over the last 2 days now. A retest, again, something we've highlighted, is about 1% away. The next level is the all-time high, which is 46,369. And near-term support for the Bank Nifty will come in at 45,467. Always better, once again, needless to say, always better to buy on a pullback, buy on a dip, rather than chase the open higher. So that's where we stand at. The Gift Nifty is indicating a 50-odd point higher start, similar to what we had yesterday. Actually, yesterday we had even stronger. We did get a higher open, but then the market moderated through the course of the day, at least on the larger indices. So, Sonia.
Absolutely. And I think, the trend of this market has been buy on dips, right? Despite a little bit of jitters, some roadblocks through the way, it's largely been smooth sailing for the market. And I think today could be the same because you have very positive cues from across the globe. The Dow was up about 300 odd points. The economic data in the US market was quite solid. And you had a very strong debut from ARM, which is, the chip design company. It saw almost a 25% up move in its NASDAQ debut. It's largely owned by SoftBank. About 90% of the business is owned by SoftBank. It's valued at $60 billion at opening. So that was the big global headline, in the last 24 to 48 hours. Not just that, the US August retail sales data was also better than what the street was expecting. So in that context, macros are looking good. The global markets are back and our own markets as well could be up and about. In fact, even the European and the Asian markets this morning are seeing good 1 to 2% gains. So the mood is looking buoyant and the gift nifty is suggesting a good opening as well. For our own markets, you've had participation come through from different pockets, right? Whether it's metals, Reliance is coming back in a big way. Infosys was the one that led from the front yesterday. So there is a lot of participation across the board. But the flows are thinning out a bit. So yesterday you had the DII sell about 50 crores while FIs bought about 300 odd crores or so. Just two headwinds. One is the dollar index is at a 6-month high. So that is something that may keep a lid on the market's gains, although up until now it hasn't. And the other one, of course, we've been talking about that ad nauseum, is the way Brent crude prices have been moving. WTI, in fact, is on pace for its third straight weekly gain. And Brent is now, as you can see, at almost $95 a barrel. So up until now, it hasn't deterred the bulls. I mean, it's just been on the sidelines. But you never know when catch-up comes through. Perhaps this could be one of the reasons.
Sonia, I put out a piece on this just, I think, a day before yesterday, that correlation between equities and Brent. And what we've learned is that usually the two, can go up in tandem. It's happened repeatedly in, previous market cycles. There are, however, instances when this positive correlation breaks down. Oil went up and the equity market fell. Specifically, 2022, the correlation really broke down because of the Ukraine war. Is it going to be the same this time, or can we continue to rally as oil rallies? That, of course, is a $1 trillion question. But, speaking of oil, I just want to mention that while we've been so busy chasing our equity rally here, I mean, Brent has been quite stunning itself. 10% this month. And 24% since March. That's a 6-month rally, and 24% on oil is not something that you can really ignore too easily. Anyway, just to talk about some of the aspects that Prashant mentioned, Sonia mentioned, there are 3 indicators which have all been bearish from the standpoint of interest rates, if you take a look at that, because the retail sales beat yesterday was a large beat, not a small one. The market thought we'll be flat, 0.1 positive. The increase was 0.6% in August. So that's a large beat. Consumer inflation, wholesale inflation, all of these prints at the headline level have been above estimates. So that narrative around interest rates is still not entirely done. There's still a 40-45% probability of a rate hike in November, maybe not next week, but November. And the US bond market seems to be pricing that in along with the US dollar, because the 10-year is again inching back towards the 4.3% handle. So our market has been ignoring all this for a while, but it's something that we still have to put on the board out there. By the way, speaking of central banks and rates, ECB did a rate hike yesterday, 25 basis points on their benchmark rate, taking that rate up to 4%. Just to come back here, I think what was missing yesterday was the banking participation. When that happens, how that happens is anyone's guess. Banks over the last 1 month have been more or less moving in sync with the Nifty. They're not providing additional impetus or leadership, and we're not getting that kind of FII money also coming in that typically spells great news for banks. So we need to keep watching that space. But mid-caps is where the action really is. The mid-cap index, after that 3% drawdown that we saw in the middle of, the earlier part of this week, it has come back with a bang, and now we're practically about 2.5-3% away from the all-time high on the index itself, the mid-cap index. I'll specifically look out for the sugar space. It was very active yesterday. There are a lot of breakouts happening on sugar charts as well, stock charts, and there's a lot of fundamental news flow. You heard the Minister, Road and Highways Minister Nitin Gadkari speaking, very, very sort of forcefully in favor of biofuels. And that entire conversation, that chatter around ethanol blending, more biofuels, compressed biogas plants that a lot of these companies are setting up, that will perhaps keep this sector in the limelight in a positive way. By the way, there was more commentary. A company like Oil India decided to announce that it's going to go net zero by 2040. They're spending almost 25,000 crores to do that. And specifically on ethanol, they're going to be spending about 8,000 crores to sort of get more active in that space. Just a sampling of the announcements that are coming in. Biofuels, ethanol, this has been a huge talking point and is likely to continue to do that. So watch out for sugar stocks. In fact, speaking of sugar, we're speaking to a sugar company today to discuss some of this and more. There's also a global deficit, so price trends important to track as the sugar season starts off, the festive season starts off. We'll have Atul Chaturvedi of Sri Renuka Sugars join in a little later on the show.
Well, thanks for reminding me that this festive season we're all going to be consuming a lot more sugar.
Absolutely, why not?
What happens to that diet, right? It goes out the window just before.
Kuch meetha ho jaye. It was a Cadbury's line, right? A long time ago.
It's Friday. We can think about that.
Sonia, you should not be the one to talk. Huh? I don't remember any time you having sweets or chocolates or cakes.
Yeah, it's always, Prashant opening his dabba with the sweets and me with the fruits. So,
All right, well, before we go any further, let's quickly tell you what's lined up here in the next half hour of trade today. We have updates from markets across the globe. Matt Orton of Raymond James Investment will join in to discuss the global setup. Our research team gets you a CNBC-TV18's list of top 10 stocks for the day. And at 8:30, our market expert, Ajay Bodke, will join in with some perspective and bets that he wants to make.
All right, on the equities front, though, first up we have Chris Wood's view, Chris Wood of Jefferies, who says that greed and fear base case remains no rate hike at next week's FOMC meeting, with the wild card in coming weeks remaining the oil price. Though for now, inflation expectations continue to behave. He says the 5-year forward inflation expectation rate declined from a recent high of 2.53% in early August to 2.33% on August 31st, and is now at 2.42%. Meanwhile, he adds, absent a further oil spike, greed and fear's base case remains that the employment data is now more important than the inflation data.
Okay, well, talking about India, Chris Wood says there is clearly room for a correction in the mid-cap area, most particularly as the continuing rise in oil prices has the potential to create some renewed inflationary noise in India, just as it does in the developed world. Still, he says, by historical standards, valuations for the big cap stocks are not particularly extended. He says it is also the case that foreign investors are not as overweight India as might be thought, given that it is now consensus that India is a long-term structural growth story in Asia, not China.
Okay, let's also get you some money market views. Lakshmanan V of Federal Bank says mixed US CPI inflation this week did little to alter expectations of a status quo for next week's FOMC. He says the ECB raised interest rates by 25 bips close to a 15-year high. He adds a dollar index nearing a year high and crude inching higher puts pressure on the rupee, which is trading in a tight range. He expects the rupee to trade in a range of 82.50 to 83.65 in the coming week.
On bonds, we have Lakshmanan V, who says that bond yields fell sharply to close below 7.15%, which is its lowest level since July end. This after India's CPI for August came in below consensus of 6.83%. Globally, US yields cooled off from highs as market digested inflation data for August. He expects the 10-year benchmark yield to trade in the range of between 7.05 to 7.2% for the next few trading sessions.
A lot of stock-specific action to track as usual. Today it's a long list. We're looking at Infosys, Bharat Forge, Strides Pharma, Sequent Scientific, CRM Silk, GMM Pfaudler, Patel Engineering, and ONGC. All of these on the back of positive news flow, and we'll tell you more about that in just a bit. The ones that have some negative news around them today are MedPlus and Alchem. All the details coming up in a bit in our top 10 segment.
Okay, Matt Orton is now joining us, Chief Market Strategist at Raymond James Investment. Matt, good to have you with us here. Good morning. Thanks for your time. From the last time that we spoke, mid and small caps here in India had one large down day. Indices were down 4.5%. But since then, some repair is underway. I don't know if you just heard Chris Wood of CLSA pointing out that oil perhaps is a worry globally. It should be a worry here in India as well. And he says some correction perhaps is expected, should be expected in that part of the market. Your thoughts, Matt, given what we've seen?
Good morning, Prashant. And I think he's right. I think with respect to oil prices, we talked a month ago, and my thesis was that oil prices were going to continue to rise because the demand is stronger than I think a lot of investors gave the economy credit for. And there are supply constraints. We've underinvested globally with respect to getting oil out of the ground and getting it around the world. And the ongoing conflict in Ukraine and Russia certainly doesn't help that. And so I think that can certainly put pressure on the small cap story in India. But again, valuations aren't that extended. And since they are tied a little bit more to an economy which continues to grow, and I think as an asset class in India, just like it is in the US, smaller companies are under-owned by investors. And so I actually like small caps quite a lot. longer term, both in the US and in India, because I think there's opportunities to extend. The key is leaning into quality companies. So as you're looking at smaller companies, there's a big dispersion between those who have earnings or a path towards profitability and those that are lower quality. And I think this applies not just to smaller companies, but to the indices more broadly. Being active makes sense, and leaning into high quality, I think, is going to be the way to play that part of the market going forward. But being opportunistic, I think, makes a lot of sense on downside.
So leaning into higher quality, you mean that you stay away from the mid and the small cap space, because that is the narrative in the Indian markets now that, after the kind of run-up we've seen, perhaps it's better to be cautious in the broader markets. Would you agree?
Well, Sonia, I think a lot of people would have said to be cautious about India in general, just after the big run-up that you had, you could say, last year, given how much it outperformed. You could have said that earlier this year. You could say it now with, the nifty trading at all-time highs. But I don't think just because something has hit new highs, that's not a reason in and of itself not to own it. So sure, in the very short term, it is extended. And I would wait to be putting new money to work, especially in small and mid companies in India. But on a sort of pullback or healthy consolidation, I think that presents a good opportunity because the longer term thesis is there. And quality, even though smaller companies might be lower quality than large, there's still opportunities within that small part of the market to outperform for companies that do have that profitability, better balance sheet characteristics. And you tend to see that cohort of companies outperform over the longer term. And so I would say whatever part of the market you're looking at, you want to lean into those factors because that's what has actually been outperforming over the past couple of weeks.
Matt, good morning. That's interesting. So you're saying that you wouldn't be averse to putting money to work again in Indian mid caps on pullbacks, right? That's what you're saying?
Correct, on pullbacks. I think in general. Yeah,
yes, I was just going to ask you that if you have the conviction, then which you seem to, then in mid caps, what themes would you look out for? I mean, for instance, the public sector enterprises here, they've had a phenomenal rally, railway stocks, defense stocks. So do you go back to the same themes, or would you be looking at newer ones that may interest you?
So I think, Surabhi, it's two-sided. I think within the same themes, infrastructure has been something I've been talking about a lot. I think the long-term secular opportunity within infrastructure plays, both down market cap and in larger companies in India, is a really exciting opportunity. Because when you look at what's driving a lot of the enthusiasm, in particular from foreign investors, in India, it's that it's winning from what China has lost. It's that supply chains are moving to India, and that's going to take a long-term cycle of infrastructure investment that you're starting to see come to fruition as well with the roadways that are being built, the new road opening outside of Mumbai. That's all tangible for foreign investors to see that progress is being made. So I think that play continues to resonate. But I also think what's interesting, I just actually spent the past week in Israel meeting with clients and meeting with a lot of startup pre-IPO companies, and the enthusiasm around recovering tech budgets, I think, is a theme. And that's probably why you're seeing companies like Infosys outperform. But I think that translates up and down the market cap spectrum, is that IT budgets in general, especially for large multinational corporations, aren't as constrained as they used to be. And so I think that starts to open up new opportunities in the IT services space. And that's an area that I would start to lean into right now as a new opportunity going forward.
All right, we'll leave it at that. Thanks a lot, Matt, for joining in and giving us your view. So that's the word coming in on how you should approach the markets. Crude is something that could put a bit of spanner in the works, especially for the broader markets. Perhaps there could be some selling pressure there. But otherwise, he likes the Indian market space. Let's slip into a quick break. On the other side, a list of top 10 stocks coming up in just a bit. Stay tuned. Welcome back. Our research team is standing by to give you the list of top 10 stocks for the day. First up, we have Infosys on our radar. Rima is here to give us the latest on that. Rima, morning.
Hi, good morning. So Infosys has entered into a memorandum of understanding, an MOU, with a global company with an estimated target spend of $1.5 billion over 15 years. But this is an MOU. It's subject to both the parties, that's Infosys and the company, entering into a master agreement. So it doesn't appear to be full and final as of now. This MOU is to provide enhanced digital experiences, modernization of business operations, where they will be leveraging Infosys platform and AI solutions. So potentially a big deal win coming through for Infosys. Back to you.
All right, thanks a lot for that. Well, I'm also talking about Bharat Forge this morning, and I'm going with green over there because there are two pieces of news that are positive for the company. And the focus largely for Bharat Forge now from here on is in the EV space as well as in the defense space, as we know. Now, on the defense space, UAE-based defense company Paramount has broadened their partnership with Bharat Forge's subsidiary Kalyani Strategic Systems. Now, Paramount will increase the global armored vehicle development and production. They want to create an India-based manufacturing hub, and that manufacturing hub in India will be geared for the export market. So they are increasing their, partnership with Bharat Forge. Now, this will include development and production of 4x4 and 6x6 infantry combat vehicles for global customers. Remember, Paramount is one of the leading global aerospace and technology companies that is headquartered in UAE. So that's one. The other positive is that Bharat Forge has also increased its investment in its EV, electric vehicle mobility arm, Kalyani Powertrain. Now, they will invest an additional 50 crores by subscribing up to 5 crore equity shares of Kalyani Powertrain. Kalyani Powertrain is in the electric and the EV, the e-mobility space, and it has been growing its business. I mean, the last 2 years, its turnover was nothing, but in FY23, the turnover was 16.5 crores. So now Bharat Forge has gone ahead and raised their, investment over there. So I'm going with green on that stuff.
Okay, so watch out for some of these Kalyani Group companies today. There's also a lot of news on pharma. Ekta is joining in to wrap up all that action. Ekta, which are the stocks on your radar?
Well, thanks for that. I'll start with Strides, where they have received a tentative US FDA nod for an HIV drug. Now, it is a tentative approval under the US FDA's expedited review provision for PEPFAR, which is basically the president's emergency plan for AIDS relief. It's a large-sized drug of around $1,345 million. The tentative approval, the final approval is expected only upon expiry of some amount of patents. So generally, in terms of the outlook and the portfolio of drugs, it is a positive for Strides. Now, moving on, Sequent is in focus because the board has approved the sale of the company's API facility at Thane. So that stock could be in the green. MedPlus as well as Alchem would be in focus on account of the IT department conducting a survey at the companies. So for MedPlus, they are conducting a survey at one of the company's subsidiary companies. And for Alchem, it is a CNBC-TV18 story, which has been confirmed as well, where the IT department is conducting a survey at some of the company's offices and subsidiaries. Both the companies have said there are no impact on operations, but we could still see red on both those stocks.
All right, Ekta, thanks very much for that. More stocks with news flow. Surabhi is here with that list. Surabhi, morning.
Morning, Prashant. So the first one is Siaram Silk Mills. Now, this is the third company after L&T and BSE which has raised the buyback price. Now, they've increased the buyback price from 650 rupees per share to 720 rupees per share. The number of shares that can be bought has been reduced from 16.61 lakh shares to nearly 15 lakh shares. Now, since the buyback has been announced last month, the stock has gained over 10%. So that will be on our radar. Next is GMM Pfaudler. The company has entered into an agreement to acquire MixPro, that is for $7 million. Now, expect the acquisition to be completed by October 2023. MixPro is a design and manufacturing innovative mixing solutions for a wide range of industrial applications. They had a revenue of nearly $3.5 million in 2023. And last is Patel Engineering. Patel Engineering in joint venture has been declared the lowest bidder for an irrigation project worth 250 crores. Patel Engineering share in this project will be 100 crores and the project is to be completed in a period of 30 months.
All right, thanks a lot for that. So those are some stocks that are in the news. But let's do one thing. Let's go across to Manisha Gupta now. She's going to track crude for us, which is, has been surging. I mean, almost at $94 a barrel now. Manisha, that's been a big headwind for our markets.
Well, absolutely. And when you look at the last couple of weeks, we have seen constant gains continue in case of the crude oil prices. This actually is going to be a third weekly gain. We are trading by nearly 3.5% on the higher side in this week itself. And, the hedge funds have been strong buyers in crude in the last couple of weeks with the kind of economic recovery that we've seen coming from China. The China cutting RRR by 25 basis points for a second time in this year clearly has been a very supportive factor. Most of the global banks and brokerages have been talking about 90 and 95, and a spike up to $100 a barrel also is not ruled out. The street will watch out and react to the Chinese numbers as well. And the markets are anticipating that even if a spike up to $100 is seen, the prices perhaps would not be sustainable there.
Okay, Manisha got that. Yes, oil on the boil. Look at that. I mean, the ticker is now reading 94 plus. Who knows what next? And by the way, we should also, mention that we'll watch out for all the OMCs on the back of this because they've rallied till now. OMCs are all up 3, 4, 5% so far in September. So let's see if this starts to bite at some point in terms of sentiment. Well, let's quickly recap our list of stocks to watch. The ones that have positive news flow are Infosys, Bharat Forge, Strides Pharma, Sequence Scientific, CRM Silk, GMM Pfaudler, Patel Engineering, and ONGC. Stocks that have negative news flow around them are MedPlus Health and Alchem Laboratories. Well, those are the stocks on our radar. Let's now, that's on the back of course, news flow. Let's watch out for some of the interesting brokerage notes as well, which could keep stocks active. Ekta's back. Ekta, tell us which ones have you picked out?
Well, I'll start with the big boy, Larsen & Toubro. Bernstein has written on it, outperform rating with a target price of 3,268. They say L&T is becoming a proxy to invest not just in the Indian infra cycle, but the Middle East transition as well. They see order momentum continuing for them. CLSA has written on M&M. They have a buy. A couple of management meet takeaways include that the company is looking at delivering 15 to 20% consolidated earnings CAGR from FY23 to 30 period with a consolidated return on equity of 18%. Jefferies has written on Grasim, buy, target price of 2270. They unveiled the much anticipated brand name for its paint business. The company would cross-leverage the group's wall putty dealers to expand the paint business reach initially, according to them. Now, Nomura has written on Tata Motors. They have a buy and a target price of 786. Nexon, attractive pricing, could be a top SUV, according to them. And Nexon deliveries are expected to commence from this month itself. HSBC has written on Titagarh Rail, buy, target price raised to 900 rupees. They expect a 2.8 times jump in profit over FY23 to 26. And DAM Capital has written on CG Power. They've initiated with a buy and a target price of 500 rupees. They say that CG Power has seen a sharp turnaround in growth and profitability across segments with a strong balance sheet as well.
All right, Ekta, thanks very much for that. So those are brokerage calls, so we'll get you more as we go along. We'll take a very quick commercial break here. Ajay Bodke will be with us to discuss some fundamental stock ideas, what he's watching this morning. And we'll also have the executive chairman at Sri Renuka Sugars to discuss price trends in that particular space. So that is what is coming up in just a bit from now. Stay with us.
Welcome back. Well, the cues are not the most optimistic or positive, considering the kind of inflation prints and other data like the retail sales data that we're getting. So on the macros, a little iffy, but stocks are doing their own thing, and the US had a good close. We're getting the sense that we'll probably start out positive as well. So let's take the conversation forward. We have Ajay Bodke now joining in to talk about fundamentals, a couple of ideas as well, and how he's reading the market. Ajay, good morning. Happy Friday to you, and great to have you on. I want to start with one specific stock. I don't know if you've had a look at it in the past or not. This is Bharat Forge. A lot of news has been coming in. I mean, they're operating in a sector which is very hot, defense. Yesterday, they announced tie-ups with this UAE firm for more defense systems. What are your views and thoughts on Bharat Forge or some of the other listed Kalyani Group entities?
Good morning, Surabhi, and thank you for having me. I think I'm very constructive on the entire castings and forging sector. I think all the obviously led by Bharat Forge, and the main force multipliers in the medium term for the company, I feel, will be, in addition to the defense sector, also the industrial sector. Because till now, I think the focus for Bharat Forge always has been on the automotive side and the tremendous spread that they have in terms of revenue streams from Europe, America, as well as the rest of the world. But what is overlooked is the fact that the company has been strongly emphasizing that over the next 3 to 5 year term, the focus will shift, in addition to having the focus on autos, on industrials. And there, I think, we are seeing multiple growth drivers from sectors such as oil and gas, defense, railways, heavy engineering. So these are the sectors, where as the capex in India keeps on picking steam, as well as orders from Middle East also start streaming in, I think Bharat Forge will have large orders coming from these streams. In addition to, of course, I think the pole position that they enjoy in the defense sector. So I think Bharat Forge remains one of the strong picks for me if I take a 3 to 5 year perspective.
So Bharat Forge is one of the stronger picks with a 3 to 5 year perspective. Also, let's not forget that the North American business, they have about 12 to 15% exposure in that business. The Class 8 truck orders that we got in the month of August, they're sitting at almost a 5-month high. So not only are they picking up in defense, they're putting more money in EVs, but even their, bread and butter business, which is the CV segment in some of the export markets, continue to pick up. So got that. Ajay, hi, good morning, and thanks for joining in. I wanted your thoughts on what's happening with L&T, because, this morning you have a report from Bernstein where they have a target price of 3,268 on L&T. That's a big upside to the current market price, and this is despite the kind of rally that we've already seen. Your thoughts here for someone who's missed the bus on L&T? Is there still more to go?
I think there's still some more legs insofar as rally for L&T is concerned. The kind of order flows that the company is talking about from the international markets, especially in the hydrocarbon sector, with the emphasis from the GCC, I think, and these orders are at a slightly higher margin as compared to the legacy orders that the company has been getting. And one of the concerns that analysts had is why aren't the margins in the core core business, the EPC business, perking up? And that is because the company has been sided with some of these old legacy orders, which basically are getting out of the way as the company's execution is picking up steam. And going forward for the next 3 to 4 quarters, I think one will start clearly seeing an upward trajectory in the margins for the core sector. So I think, and plus all of us are aware about the Government of India's emphasis on infrastructure capex, mainly railways, roads, power transmission. And the company is the major beneficiary of that, in addition to the emphasis on defense. So I think L&T, again, in the EPC business, I would say L&T, Siemens, and KNR Construction are the 3 companies that I would be constructive on.
Got that. By the way, Ajay, in a bit from now, we'll have the management of Renuka Sugar joining us, right? And we'll understand from them what's going on there, both on the sugar and ethanol space. But just your thoughts on this space. One is the regulatory side of things on sugar, which is, will even though there is an upward kind of pressure on sugar prices, will sugar prices be allowed to rise? Many believe that will not be the case with elections, etc., coming up. Yesterday, we had a note from DAM Capital, which they said, well, prices will stay strong, And then, of course, there is the ethanol side. which remains strong and is like a longer term story which will continue to play out. What's your view here, and what are your bets?
I think, as you very succinctly put it, there are pulls and pressures that the sector sort of is undergoing. I think just yesterday I came across the Brazil production numbers, which are up by roughly, I think, between say 7 to 8%. Brazil, mind you, is the largest global producer of sugar. So I think on the headwind side, I think globally, I think if you were to look at sugar prices, I think Brazil will play a key role. But in India, which also was a large exporter last year, the government will simply not afford to allow the inflationary pressures which are already entrenched, especially on the food side, to get any worse, especially with elections now coming in the crucial Hindi heartland states a couple of months from now, followed by Telangana. So I think, so in my opinion, I think the government's regulatory pressure will ensure that there is a cap insofar as the price increase is concerned. The government has already come down quite heavily in terms of the stock limits that it has imposed on the sugar mills. So I would sort of be positive. At the same time, we always be looking at sort of the valuation, whether the valuations become too frothy. But I think there's still some more leg to run, in my opinion, because the rally has just sort of started. So Balrampur, I think, is my preferred pick in case of sugar sector.
Okay, so Balrampur would be your pick in sugar. Got that. I mean, just coming back to yesterday's news, Ajay, yesterday Bombay Dyeing made huge headlines, right? 5,000 crores is not a small sum of money. Obviously, Bombay Burma was also up and about. What did you make of this transaction? Any thoughts on these Wadia Group stocks?
I think the market cap of Bombay Dyeing was significantly lower, than the total sale proceeds that the company would be getting on selling 22 acres of prime real estate at Worli. And the company still holds large parcels of land in the Mumbai metropolitan region. It's one of the largest landowners traditionally, historically, in the Bombay city. So I think, but then I think this is, in my opinion, episodic, because the main core business of Bombay Dyeing, I think, has been a concern, has been loss-making. The company has not really been very efficient in terms of its main operations. So the market would, in my opinion, discount this as a one-time gain, this sale. And once it factors in that, I think it will be business as usual in terms of markets focusing on the core business, which unfortunately I think isn't doing too well. And that's true for, in fact, almost all the companies for the group.
Okay, Ajay, I do have many more questions for you, specifically what's happening with the IT space, right? There's so much traction there. Infosys has got this this huge order, $1.5 billion order as well. More on that on the other side of the break. I have to take a short commercial break, so we'll be back in a bit. Also, as promised, we have that discussion with Atul Chaturvedi, who's the executive chairman at Sri Renuka Sugars, to discuss all the pricing trends in the sugar space, to put focus on the biofuel push, on ethanol. More on that coming up.
Well, we were talking about sugar when we started. We're going to talk about sugar now because that's the sweet spot in the market, if I could say that. Ethanol blending and price revision expectations, of course, are keeping sugar stocks really perked up and elevated, according to this DAM Capital report that Prashant was alluding to earlier as well. Fast developing El Nino conditions are further hampering production, global production, and prices have been trending higher. Atul Chaturvedi, Executive Chairman at Sri Renuka Sugars, is with us now. Mr. Chaturvedi, lots to talk about. New sugar year is starting, prices, ethanol. I don't even know where to begin. Actually, I'll start with ethanol because we were speaking to Highway Minister Nitin Gadkari just yesterday, and he made a very, very emphatic pitch for, increasing the presence of biofuels in the mix, ethanol, etc. Can you just tell us right now how much of the revenue? I think you said 35 or 40% of revenue is coming in from ethanol. But how profitable is the business for you? And in terms of ethanol pricing for the next year, what would your expectations be on this?
No. To answer your last question first, my take is that the government will have to necessarily increase the price of ethanol suitably to ensure that ethanol continues to remain much more attractive to the sugar industry as compared to sugar. So I'm sure the government is definitely aware of this fact, and with sugar prices on the boil worldwide, and India also inching up a little, I won't say India is on the boil, but inching up a little. So I think next year ethanol values will probably have to be suitably tweaked upward.
How much, sir? Can you give us a sense? How much of a price increase would you like to see? I mean, wish list.
Yeah, our wish list would be minimum 5 rupees a litre. Currently, ethanol from juice is closer to about 65 rupees a litre. We would probably want it closer to about 70 rupees a litre. And with the international Brent also firm and no subsidies involved per se in ethanol blending, so I think it should not be too much of a problem for the government to jack up the values.
Okay, so minimum 5 rupees a litre is what you're talking about on prices of ethanol. But I wanted to talk more about the ethanol blending program. I think up until now it's reached about 11 to 12%. What is the way forward? Do you think that 20% target can be achieved? And at your end, what is the prognosis on ethanol blending?
In fact, if you really look at the government's target, the government was targeting about 10.16 billion litres of ethanol to be sourced by 2025 to achieve a 20% blending rate. And the ratio of that was from the sugar sector, they were expecting about 5.5 billion litres, and from the grain or allied other sectors, about 4.66 to make it 10.16. My take is that sugar sector has the right kind of ecosystem in place.
Right.
Grain, in any case, you are seeing that it's moving much more northwards. So
Right.
if you really look at blending and the availability of ethanol as of date, about 80% is currently coming out from the sugar sector and only about 20-odd% from the grain sector. And the government will have to up the target from the sugar sector, and I'm sure the sugar sector is quite capable of increasing the output of ethanol going forward.
Right. Mr. Chaturvedi, good morning. Prashant here. Just a few questions, if you can be a little brief. We are running short of time. First is on the cane pricing side, what's the situation? I think in Karnataka we saw increase. In Uttar Pradesh we saw some reports that perhaps that is under consideration. So far, nothing. What's the situation? I mean, you were a big player in Maharashtra.
No, I don't think any change has happened in Maharashtra or Karnataka. We've only been hearing from the press and the media that UP is going ahead with 250 rupees increase, which will be quite, I would say, wrong at this time of the year. When
but could it happen, Mr. Chaturvedi? Could a hike happen?
I can't comment on that. It is contradictory to what the government efforts are to keep the prices in check.
Okay.
So I'm not sure whether it will or not happen.
Yes, I agree with that. I agree with that. But then you began by saying that sugar prices are on the boil. So then sugar prices also will stay where they are, right? They will not be allowed to go up, and they will remain at a significant discount to international sugar prices, isn't it?
Oh, yes. Oh, yes. India is a very well-regulated market, and I don't see Indian values going up too much. They might inch up a little in sympathy with the world values, but can't go through the roof. Absolutely not.
Do you expect any further restrictions coming through we've seen a slew of measures across commodities, food items. Sugar perhaps is the only one where we've not seen, anything incrementally. Do you expect anything?
No, I don't expect too much on that front because sugar, by and large, because it's a regulated commodity, is inflation-proof. So the values have not gone up all that much to create flutter in the decision makers.
Mr. Chaturvedi, I just had one follow-up question to the ethanol blending program you were talking about earlier. Will you look to get into grain-based distilleries at any point in time? Is that, can you build the capacity for that?
Honestly speaking, as far as we are concerned, we are not sold out on the grain distillery concept, and so we don't really intend going in for grain distillery as of today.
Okay.
Mr. Chaturvedi, that's ethanol. Just to go back to that point on, expectations on cane pricing. Right now, local prices are pretty high, right? 36, 37. And the festive season hasn't even begun. Leave us with an outlook on domestic sugar prices.
No, the domestic sugar prices at this time of the year normally would be high because this is the fag end of the season. So I don't see sugar prices going up much further. Maybe marginal here and there. But then after a month and a half, you would have the new sugar coming into the play. So I think it's only a temporary phenomena.
Okay. Just one last company-specific question. So your ethanol capacity is 1,250 KLPD right now?
That's right.
As at the end?
Right.
Are you looking at expansion? Are you looking at, what will that number stay where it is, or will we see it going up?
We have just completed our ethanol expansion in the March of 2023. And the full play of the expanded capacity will come into play only this year. At the moment, we are not really expanding further for the time being.
And what is, by when will the full capacity come on stream? The expanded capacity?
No, the expanded capacity is already on stream. And in fact, with this crushing season coming into play in October, November, we will have our full blast ethanol production.
Got that. Thanks very much, Mr. Chaturvedi. Appreciate you joining in. It's a pleasure having you with us here on CNBC-TV18. Thank you. Thanks very much.
Thank you.
Okay, Mitesh and Srikanth are with us with what to do today, short-term trading ideas. Gentlemen, good morning. Good to have both of you here as always. Mitesh, let me come to you first. How are things looking? Yesterday, it was not a fizzle out, but it was not a big day. It was an up day, but not a big day, at least on the large cap indices. What's your sense?
Morning, Prashant. I think, the key lack of momentum at higher levels, what is happening is that we have had about 3 weeks of non-stop rally. If you look at the weekly charts, from the 1st of September, low of 19,223 to a non-stop move to about 20,167 yesterday. We're mildly overbought, and I think there's, the bank nifty issue which is pending for the indices. I think the bank nifty, if it starts to get past the highs of 46,200, that could add momentum, and that could see the nifty gain more momentum. And that slight selling pressure which is happening at the higher levels will possibly be absorbed. So I would want to see the bank nifty come into action. Otherwise, the broader direction remains on the long side, and we have maintained that intraday dips would be buying opportunities. So I think that's the way we are proceeding ahead. But a move above 46,200, 250 should add about quick 300-400 points on the bank nifty, maybe more. But I think that's the at least minimum I would expect.
All right. Srikanth Chauhan is also with us. He's the Executive Vice President at Kotak Securities. Srikanth, how are you feeling about the market now? This has been an uptrending market, of course, with some hurdles in the mid and the small cap space. But what is your call for the day?
Good morning, Sonia. Good morning, Prashant. Yeah, I think, see, the markets are like now very close to crucial levels of, let's say, 20,400, 20,500. So the upside is nearly 300, 400 points from the current levels. And in that, I think we are going to see gradual sort of activity. But yes, the overall trend is on the upward side. And our strategy should be to look for adding position if there is any correction in the market. Most of the large cap stocks, mid cap stocks, they are participating into the trend. And for the day specifically, we are expecting 20,200 going to act as major resistance. If we see on a weekly basis, the Nifty is closing above the same, then the next level to watch out for would be 20,400. But in case if there is any correction, then I think 20,000 is going to act as support and it should not close below the same. Otherwise, again, we are going to see some sideways sort of activity in the market. But yes, for the Bank Nifty, I feel it's a continuation of formation and it is going to surpass its previous high of 46,400. So certainly it's a buy at current levels with a stop loss at 46,000.
All right. Got that. You know, what we'll do is we'll take a quick commercial break here and we'll come back with more stocks on the other side. So stay with us. We also, by the way, will have Sumit Kishore of Access Capital and we'll talk about the capital goods space with him in just a bit from now. Stay with us.
Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio, and we have Mitesh Thakkar and Shrikant Chauhan with us to talk about their ideas, individual stock ideas, and what you should do as you head into trade. Mitesh, let me begin with you. What's on your list?
Morning, Sonia. I have all buy calls today. Chola Finance is the first stock to feature on the list. 1180 is the recommended stop loss, and I would look at a target of 1275. Yesterday, a very strong price and volume breakout happened on the charts of granules. So that should see good momentum in the coming days. I would look at a target of 350. A stop at 326 is what I recommend. Also, a buy on Indraprastha Gas. Keep a stop below 462 here, and a target of 490 can be looked at. And the final buy call is Bharti. It had a good breakout day before yesterday. Yesterday was a pullback kind of a day. So around 910 is what I suggest traders to enter. Keep a stop below 890 here, and 955 is the trading target.
Okay, got that. Mitesh, thank you very much for all of the trading advice for the morning. Shrikant, hi. Happy Friday to you as well. What about stocks? What are you trading today?
Sorry. Yeah, I think, see, all these bank stocks and metal stocks should do well because the overall momentum in this particular space is like better than other indices. So if we go through with the metal space first, then Tata still looks really good. It is on the verge of crossing its trading range. Above 133, the stock can move to the next levels of 140. So based on technical formation, it's a buy at current levels with a stop loss at 128. And the other stock which we like is Canara Bank. And it is trading within the range of 20-25 rupees, which is rare. So based on the overall formation, I feel that the stock is heading for the levels of at least 385, 400 in the next few days. But in the near term, we may see the levels of 380, 85. So Canara Bank is also a buy at current levels with a stop loss close to 359.
All right. Well, thanks a lot for that, Shrikant and Mitesh. Manoj Muralidharan also joins in. He's the Vice President Derivatives at Religare Broking. Manoj, what are your thoughts on individual stocks? What are you looking to buy and sell today? And on the index, how are you feeling?
Good morning, Sonia. Sonia, I guess we are entering into this new weekly contract. So there is an equation, at least for the September series. If you see, the Nifty has managed to add a good 8 odd lakhs from where it started this September series. But on the flip side, if you see, Bank Nifty has covered almost 15 lakhs in terms of open interest. We almost started at 30 lakhs, 28 to be precise. And now we are almost at 16 to 15 lakhs. Now, in the event, if we see a long position in the Bank Nifty, which we expect might happen today, then we have more leg on the upside. And Nifty, 20,300 is a possibility, at least on the spot basis. So we're expecting a 150, 180 odd point bounce in the Nifty. But because the Nifty has been hovering in this range, and yesterday after the expiry, we believe that 20,100 to 20,130 on the futures. That's a good level to go long. The stop loss should be 20,050 and 20,300 would be the target. Now, stock specific, ONGC has seen good build up. We would wait for a dip of somewhere close to a 186 to 188, where it becomes a buy. A stop loss should be 183. The stock has a potential of almost 194. From the pharma sector, we believe that Lalpath Lab has done excellent, and there is huge buying which has happened yesterday. But again, a weighted average price of 2300 to 2315 is where we recommend buying. A stop loss of 2270 and a target of almost 2380 on the stock.
Okay, well, Manoj, thank you very much. And Manoj is in Friday style once again. So good to see that, the jacket comes off, I guess, after market hours and, hitting some of the cool places. Thanks very much, Manoj, for joining us as always. Well, let's put the focus on the capital goods space. Risk reward in the capital goods space is running low. This is according to Axis Capital's cautious view now. Sumit Kishore is Executive Director at Axis Capital. He tracks capital goods, power infrastructure at the sell-side house. Sumit, good to have you with us here, back on the program. Thanks very much. So tell us, why are you broadly cautious on the space? Is it largely valuations, or is ordering activity also starting to peak out a little bit?
Well, good morning, Prashant. Thanks for having me on the show. I think, one gets the feeling after looking at stock moves in the power sector and even across the broader industrials capital goods space that I track, we are behind, we have kept the sprint season is behind us. We are in for a marathon. And I think that the horizons for discounting cash flow are getting pushed back further into future. One is having to factor in higher option values for future growth opportunities to justify upsides on current price almost across the board. So there are stocks which we find are a bit overdone, but there are opportunities too, as generally happens.
Sumit, and you're talking about specifically the capital goods space, right? Not power utilities, or both?
Well, I was talking more at a broader level. In the capital goods space, over the last 7-8 quarters now, we have seen a fairly good run as far as order inflows are concerned. We've seen earning upgrades as a result of that, and order backlogs even till June quarter for almost 11-12 capital good companies aggregated, excluding L&T and the PSUs, was an order backlog growth of almost 24% on a year-on-year basis. So execution is likely to track well in the near term. Commodity prices have softened on a year-on-year basis. So gross margins are well supported if the pricing pulls up. And there are operating leverage-led margin gains which are benefiting the EBITDA numbers now for the last few quarters. And if I look at the aggregate profit growth for capital good companies, it's been tracking above 40-50% over the last few quarters on a year-on-year basis. So earning upgrades have happened, but valuations for a lot of these companies have run up beyond one standard deviation above long period mean. And that is making us slightly uncomfortable. Suppose you have a weak quarter on order inflows because with the commodity prices coming off, you have an adjustment in the value of contracts that the companies report for the same volume. You might have to sort of start looking at earning cuts for FY25 or 26.
I think that caution is taken on board, because even if you look at a stock like BHEL, right, Sumit, I mean, if you map a 5-year chart, it has done nothing for investors. 5 years back, it was at 70 rupees. And I think last year it was at 70 rupees. So it's only this year that it started to move a little bit. So for people who are perhaps holding on to these names, some of these capital goods companies that have, pressure on their working capital or on their balance sheets, what do you do? Do you take profits here?
I think, so BHEL is a case in point where for the last 2-3 years, there was hardly any award of fresh thermal projects. And now, over the last 12 months, you have had 2 coal-based projects of NTPC, totaling to about 2.9 gigawatt getting awarded. So I think there is definitely a finite capex cycle for thermal power projects that is going to be there, given the evening peak demand challenge that we are into. And over the next 3 to 4 years, that is just going to increase, given that the base load demand is also increasing. But I feel that the tariff of a new built coal plant has to be compared, with the price of a viable renewable round-the-clock solution. Till the latter becomes more attractive, the country will have to add fresh thermal capacity. And this finite phase where BHEL and L&T will see thermal contracts will definitely show up. On fundamentals, if you evaluate the NPV of this finite cash flow, and particularly for BHEL with a near zero or negative terminal growth beyond 2030, then it appears that the stock has run up, beyond fundamentals.
Okay, Sumit got that. By the way, the pre-open rates are in, and they're suggesting that we'll get a nice little positive start once again, about 50 up on the Nifty right now. Bank Nifty is up 0.25% as well. So let's see if this is how it plays out. In the pre-open, again, the mid-cap index is doing better than the Nifty. So lots of green as we start things off this Friday in all probability. Sumit, so like you explained, and I think this is something that that has become well known now, that because of this mismatch in demand and current supply and more thermal ordering, orders will perhaps keep coming. The question is picking companies which will have the best execution capability and, that run rate. That P&L run rate needs to come in as well. From that standpoint, which company stands out for you, where at least market might anyway be overestimating things, but I'm just saying, pure earnings basis, which stocks and which companies will stand out for you in terms of execution, bringing that to the revenue line, and then finally to the bottom line and EPS?
So I think in the broader capital goods space, we have a preference for L&T. We think that they have had a good run as far as order inflows for Q2 is concerned already, and with the deficient rains in August, execution would be looking up there as well. The commodity prices provide tailwind as far as margins are concerned, and over FY23 to 26, we expect core earnings of L&T in the projects and manufacturing segment to grow about 18% CAGR. So while valuations are looking high, we've been selective on the names that we want to push, and there are a few other catalysts which provide good news for L&T over the next 1 year.
Okay, so L&T is the top idea there. In your coverage universe, you began by saying that generally things have run up, right? Risk rewards have become a little unfavorable. What are the other top absolute return ideas from here, Sumit? Or you think it's kind of time to be a little cautious overall?
I think it is time to be cautious overall. Even in the power space, for the companies that I have been talking about on this channel, NTPC, JSW Energy, they've had very good runs when it comes to price performance. And one really has to factor in more medium-term growth opportunity to justify upside from current levels. So maybe you could have some sort of consolidation around current levels before you basically press the button to buy these stocks from near-term perspective. I think it's the marathon that we are more interested in now, that over the next 3 to 4 years, there are opportunities in the power space around the clean energy transition that we like. And likewise for capital goods, I think my experience in the last cycle was that earning upgrades continued between, say, 2004 to 2008. And if you purely sold the stocks on valuations, you would have gone wrong. So I think in this cycle too, the gross margins are well above where they were at the peak of the last cycle. And there is a big opportunity to improve margins via operating leverage if the top line growth momentum continues. And it appears to be broad-based as of now. While valuations are looking high, if earning upgrades continue, I think the stocks can remain expensive for a longer time as ROEs and ROCEs improve.
Okay, all right. Sumit, we leave it at that. Thanks a lot for joining in. By the way, the pre-opening rates have settled a tad bit higher, 50 points higher now for the Nifty. The mid-cap index is up almost about 0.5%. Let's get some 9-10 calls going and find out what you should be doing at this juncture. Mitesh, what's your view?
I suggest buying into granules. Keep a stop below 326 and 350 should be the first target on the upside.
Okay, buy into granules. Got that. Nimesh is joining us. He has a standout brokerage report of the day. Nimesh, what are you looking at?
Hi, Sonia. So today's standout is on Bajaj Auto, the stock that you track very closely. BofA Securities has today upgraded the stock to buy from neutral, and they've raised the target price to 55.50 versus 5100 earlier. Now, the title is very interesting. It says "Time to Trump" and all multiple, there are multiple growth drivers that are at play for Bajaj Auto. In fact, they believe that all the business verticals should fire from FY25, largely on back of strong export standing corner, three-wheelers on a high, and a recovery in the domestic two-wheeler business as well. In fact, all this would mean that the company can report 14 to 15% revenue CAGR between FY23 to FY26. But according to the note, the big valuation re-rating would come from the two E's, that is electric vehicles as well as exports. So BofA turning positive with that they've raised the target price in Bajaj Auto now to 55.50.
All right, thanks a lot for that. Bharat Forge is the other one that I am looking at this morning. Now, the stock is in the green because of two reasons. One is that they're increasing their focus or their presence in the defense vertical. And the other one is they're increasing their presence in the EV space as well. So these are the two, top sectors that are growing, and Bharat Forge is increasing presence there. UAE-based defense company Paramount has decided to broaden their partnership with Bharat Forge, with Kalyani Strategic Systems, actually, which is a subsidiary of Bharat Forge. They will increase global armored vehicle development and production. Paramount wants to create an India-based manufacturing hub, particularly for the export markets. Now, Bharat Forge and Kalyani Strategic Systems will foster the expansion of the company. It will include development and production of 4x4 and 6x6 infantry combat vehicles for global customers. Bharat Forge will also increase their investment in the EV mobility arm, Kalyani Powertrain. So they have come out with an announcement where they will invest up to 50 crores by subscribing up to 5 crore equity shares of Kalyani Powertrain. And, Kalyani Powertrain overall has had a good year. In FY21 and 22, the turnover was nil. But in FY23, they did about 16.5 crores. So the expectation is that, this defense, or rather this EV mobility arm will continue to give good returns. But let's get back to the markets now. Looks like it's going to be a solid opening, a decent opening rather. 50 points higher for the Nifty. The sensex is up 150 odd points. Led higher by a lot of stocks. Bajaj Auto on the back of that BofA upgrade is looking pretty good. So 1% higher there. In fact, a lot of auto stocks. M&M is also in the green. Hero MotoCorp holding up with a gain of about 1% odd. Restaurants, brands, there was a deal that happened over there, so just keep an eye out on that. It's up about 11%. RBA, which is Restaurants Brand Asia, so that's another stock that you'd want to look at this morning. But here we go, last trading day of the week, and the first take on the opening bell coming right through. It's looking pretty good, 60 points higher now on the index. The Sensex is up about 220 points, and the Bank Nifty is up 156 points. So holding on to 20,000 with ease, in fact, almost inching towards 20,200 now. The Nifty at a fresh record high. The Sensex as well is inching towards its 68,000 mark. So don't, lose sight of what's happening with the Grand Old Index. It's also, getting to psychological levels. What's leading from the front today is metals. Hindalco, Tata Steel, JSW Steel, all in the green, up about 1 to 1.5%. Bajaj Auto is your top Nifty gainer right now on the back of the BofA Securities upgrade that you heard about just a while back. M&M is also in the green. Tata Motors, HCL Tech, LTI, Mindtree, Hero MotoCorp are a couple of other stocks that are trending in the green. So what's not looking good is FMCG. You have HUL, Asian Paints, ITC, just taken a backseat. Tata Consumer Products, little bit of a backseat this morning, nothing alarming. But apart from that, HDFC Life, Bharti Airtel, NTPC, Kotak Mahindra Bank are some stocks that are a tad bit in the red. The good part is, and what the market will really, appreciate, is the fact that mid-caps are surging. So, there were a couple of days when mid-caps were under a bit of pressure, but now that pressure has receded, and the mid-cap index is up 230 points and very, very strong advanced decline ratio as well. So, good, strong opening for the market.
Oh, absolutely. The Nifty is doing quite well with that 60-point gain. Mid-cap's doing even better. I straight away want to get to some of the newsmakers. Now, Siaram Silk, they have increased their buyback price quite substantially. The buyback price is now 720. Earlier, it was 650. The stock is loving it. It's at 631. You will get 720 if you want to participate in the buyback. 7.5% up. Straight away, Patel Engineering announced some order wins. 5% on that stock. Sequence Scientific is looking to sell off their API facility, I think, facility in Thane. The market is taking that well for the time being. 5% up on that stock. There's GMM Fordeler, which has done a small little acquisition, about 3% up there as well. Bharat Forge, Kalyani Forge, some green on these two as well. We were just telling you about the tie-ups that they're doing with a UAE-based company on armored vehicles, and both of those stocks are up and about. So the newsmakers are positive. Alchem, where there's talk of, this IT survey, income tax, that stock is down about 0.5%. MedPlus isn't reacting too much. MedPlus is very, very flat. Interglobe to their entire engine issue. It's again down about 0.25%, not too much. Let's move beyond news and see what's happening. Restaurant Brands Asia, Nimesh has been alerting us about the prospects of a block deal. That stock straight away starts about 9% higher. Then you have some more names like NMDC Steel, IOL Chemicals. These are the early movers. Lemon Tree, early movers in the mid-cap market. Some PSU banks are coming up on the screen now. PSUs and PSU banks. So NBCC, Union Bank of India, SAIL, NMDC. These are some of the PSU names that are off to a positive start. But you have to say the mid-cap market is not roaring away just yet. I mean, the close yesterday was absolutely phenomenal. It's very early, we've just started, but there is a hint of positivity around it for sure. And the Nifty not bad at all. 20,151. Bajaj Auto, M&M, Tata Motors. It's an auto morning, must tell you that. Autos are getting really, really excited as we approach the festive season with Ganesh Chaturthi next week. And metals continue to trend higher. CRR cut in China, or reserve ratio cut in China yesterday. In general, metals are not bad at either this morning.
Okay, well, long list of stocks there. 50 points higher. We're at about 20,150 at this point in time, and things are looking pretty good overall. Market breadth is good. I mean, you got about 7:1 in terms of advances to decline ratio. Take a look at the mid-cap index. Mid-cap index is up 0.5%, and you've got the small-cap index, which is up about 0.75% as well. I think we've kind of gone through a fair bit of names, but Restaurant Brands Asia is the big one, 10% higher, and that kind of continues with the tradition of, large blocks and then stocks moving up. CDSL is up about 3.5%, and there is Bajaj, which Sonia was talking about, Nimesh was talking about, which is up 3.5% as well. REC is up 2%, Nalco is up about 2%, Titagar is up about 2%, and Shakti Pumps is another one. Shakti Pumps is coming up with about an 8% pop, so that's a big one. Two companies we had yesterday, Star Health starting 3% higher, and the other one was Narayana Healthcare, which ended up about 6% yesterday. So both were on the program on Bazaar yesterday, and both once again are following through with some gains here as well. So more in a bit from now. NIIT, the big stock of the week. I mean, NIIT, same time yesterday we were saying that how it's up 80% this week. And then it kind of climbed down a little bit. It's down a little bit more. It's down about 2.5%, but still 75+% in 4.5 days with today to go. Mahesh Patil is now joining in to run us through what he's making of things and how he's seeing the markets coming through at. He's Chief Investment Officer at Aditya Birla Sun Life AMC. Mahesh, it's a pleasure.
Yeah, good morning.
Great to have you with us here, and thank you for coming in. How are things looking, Mahesh? Are you, a lot of fund managers we've spoken with, especially, your colleagues over at, not colleagues, but peers over at Kotak, they've been sounding the alarm bells and caution as far as the broader markets go, mid and small caps, etc.
Right.
Are you as concerned, or you think, it's a longer runway here?
Yeah, so I think there's no doubt that the market in the last, few months, we've seen a steep rally over there. And arguably, because of the liquidity which has been there, right, both domestic as well as foreign, we've seen stock prices go up. And more so because a lot of inflows in the last 6 months or 1 year has been, especially domestic flows, have been in the mid-cap and the small-cap segment. In the mutual funds. Almost like 40 to 50% of the incremental flows are in that category, and that has led to some kind of a, outperformance, right, in that space. But I think if I look at from a slightly medium-term view, I think India, overall, the outlook on growth is looking fairly decent. Despite the global slowdown concerns, which you might see in the next couple of quarters. And the good thing is that a lot of sectors which are participating in that. It's not like one or two sectors, it's more broad-based. If you look at right from the banking sector to the investment cycle now, which is picking up after a long time, the real estate sector, even pharma for that matter, and even the IT sector, right, which is likely to get the brunt of the slowdown, looks to have bottomed out over there, right? So given that, I would say that the market still has longer legs. When you see a sharp rally, there is some pullback, which could always be there. But even in the mid-cap and small-cap segment, it becomes more stock-specific then, right? The broader market or the index might look a bit expensive, especially in the small-cap space. But there the universe is very wide. You need to look at new ideas over there. And I think while the valuations look expensive on a trailing basis, but I think if India growth story plays out as we think, and if you have stability, Right? I mean, elections are there next year, but if the election results are good, I think you could have a long runway of growth for India. So in that scenario, the earnings growth in mid-cap and small-cap would be much stronger.
So they're not expensive, you're saying? I mean, despite the run-up, you're saying that
yeah, I mean, it's expensive. One can see you can't sell and again get in, right, into the market. That's always difficult, even for fund managers and even for investors. So, I mean, don't go aggressive. Okay, stick to your allocation. I think that should be the mantra rather than trying to get out of the market.
Okay, since you're talking about mid and small caps,
yes.
My colleague Nimesh is waiting by. He has a company on his radar, Restaurant Brands Asia. So let me just go across to him and I'll come back to you for your thoughts on that. Nimesh, over to you. Why are you tracking this one?
Hi, Sonia. So there was a 25% block which got done in the block window today morning. I hinted as well that there's going to be a large block in Restaurant Brands Asia. What I understand from sources, the promoter entity, which is private equity Everstone, they sold 25% stake in today's block deal. Since the block happened in the block window, it do suggest that the demand was quite strong. But I understand 90% of the book was bid by the long-only funds, and only 10% was given to the hedge funds. Now, the Everstone, the private equity owns close to 41% stake in Restaurant Brands Asia, and they've sold it at 25%. So nearly 70-80% of the stake they've sold via block deal. And again, this has been the trend. After a large block, the stock moves up. The fact that the demand was quite strong. And also for QSR, overall in general, looks like the quarter 3 and quarter 4 are going to be quite strong. So there is momentum now. But the fact is in Restaurant Brands Asia, what I understand from sources, the promoter entity, Everstone, has sold today 25% stake to institutional investors.
For that, so that's on Restaurant Brands Asia. But Mahesh, I wanted your thoughts on this, for the mid and small cap space. I mean, you're saying that there's still perhaps a longer runway, right? So how do you sift the wheat from the chaff? What are the pockets that you would look at? What are the sectors that you still like despite the rally?
Yeah, so I think, one can't take a shorter-term view over here. I think you have to be slightly careful because few stocks, because of liquidity, we've seen a sharp run-up over there. But I would look at companies, where the runway of growth is much longer. I think some of the cyclical names, which have run up, I think there could be probably in this kind of run-up when there's a downturn, you could see a larger drawdowns over there. So structural stories, right, where say for example, whether it's in the consumer space, right, we've seen a lot of good mid-cap and small-cap companies coming into the market recently. And India, we believe that the consumption story, really, the discretionary consumption, would have a long runway of growth. I think we are at an inflection point where your per capita GDP is now at around $2,300, and short term there's weakness because of rural slowdown, but I think that should also come back. And in fact, getting into election, you will see a lot of spending happening, right, by the government, and which could drive consumption. So you look at sectors where the runway of visibility is good. So even if there is a short-term correction, I think you would not really panic and want to sell out, right? You'll use that opportunity to add in.
Sure.
So stocks are sectors where the conviction is higher, runway of growth is better. I think those are sectors which would like to own. Though I would still caution that, one needs to be cautious over here, right? In that, not be aggressive and look at it, wait for the opportunity. Don't chase price point because we've seen, any slight positive news or liquidity and the stocks just run up. I saw today, right?
Yeah, and they correct. I was just noticing that I think on railway stocks, the correction is hardly 15-20%.
Yeah, so
after a run up, which is 200%.
Right. So that you have to be careful in those pockets, right, where they run up and valuation. I think valuations, fundamentals, needs to again look at it and see. Market, you're not going to get stocks cheap, right?
Sure.
Because the liquidity in the outlook is good, but at the same time, reasonable, some consideration for the outlook growth. But I think that framework, if you keep in place, I think one should be fine.
So, Mahesh, let me ask you one thing. What is the risk to this market? And I'm not going to ask you about inflation because inflation is a consensus. And when there is a consensus known risk, people say it no longer is a risk because the market knows that you're working with that. Aside of some, complete tear in inflation, we're talking about crude at 94, monsoons are doing what they are.
Right.
Apart from that, is there anything else that we're missing?
So I think, if you look at the concerns really are from the global side, because that's where the sharp increase in interest rate happened, right? The increase in interest rates in the US is historical. We've not seen in many decades. And that could lead, while US growth is still fairly good, we have seen not any major shocks, but that kind of interest rate, and it could remain for longer. Our view is that rates will remain higher for longer. And that could lead to some kind of a blowout. We don't know, right? These are unknown, as you rightly said. The known risks are already there. But the unknown risk is what you should be worried about. And that kind of environment, you might see some kind of a blowout which could happen. We saw some scare some time back, right, in the regional banks in the US. But that was more of a liquidity issue which was immediately averted because of a backstop by the central banks, but there could be some blowouts there, and the risk would essentially come from the global market, where you could see a risk off and you would probably have a collateral damage over here in our markets.
Mahesh, so which are the slightly longer runway, still good levels kind of areas? What specific pockets, if you can identify?
Yeah, so I think one is, I talked about the consumer discretionary sector, which includes all the retail, consumer durables. I mean, they are currently going through a slowdown, but that's a good time actually to look at it, because
durables,
consumer durables,
right.
then retail sector, right? All that space.
So durables, you mean white goods and stuff? I mean,
white goods and others.
Voltas and Whirlpool and
yeah. I mean, these are stocks which are currently still going through the competitive intensity and this thing. But again, if I take a 3 to 5 year view, that sector should see a reasonably good growth runway. Apart from that, I think even the power sector for that matter.
Sorry, you said retail, and there you mean sort of what kind of names? Just to give an example.
So retail could be apparels, footwear, right? Even other retail companies, okay, which are there into, say, jewelry. So all that segment looks as good, more from a structural long-term perspective. Power is another sector which we are seeing after a long time sizable investments coming in, both in the thermal as well as on the renewable side. And that could another be a sector where...
But where, again, in power?
So power, utilities are still reasonable, I would say.
Okay.
The challenge in utility was that growth outlook was not that great earlier. But now the visibility of growth is looking much better. Okay. So they offer a reasonably good risk.
We just
reward.
had Sumit Kishore of Axis earlier, the analyst. He said valuations are kind of now, they've run up. I mean, so he said the sprint phase is over, his words, and now it's a longer, more calmer kind of phase.
I agree. So I think now in the market, you have to really look at stocks, okay, which will compound and give you steady return. And they're trying to chase big returns over here in the market could be also risky. So you want companies where the runway, as I said, growth is fairly recent, and you play on that compounding, right? Anyways, on the broader market, we are not expecting any large returns, right? Our expectation return market is that it will be somewhere near its kind of a long-term average, 12-13%. So any stocks which give you better than that with reasonable comfort, I think should be a good investment.
Do you like the equipment space as well? Power equipment?
So power equipment also should do well. Only challenge there is that a lot of stocks have run away quite a bit, right? So again, it's a question about then a balance between the valuations and the outlook, right? So you have to get both the things right.
We have a discussion coming up with HPL Electric. I mean, the smart metering opportunity in the power equipment space.
Right.
Do you own any of those sort of names in there?
Unfortunately, because it's a very niche and small segment. There are not too much opportunities over there. So we would normally look at some of the broader plays. Pharma also looks good over here, again, as a good defensive. And in fact, I will not be even negative on the IT sector, right? Because that's a sector which has been talked about a lot. A lot of negatives are already priced in. And the whole runway to digital, I mean, the move towards digital is going to be a longer term theme. It's not going to be like a 1 year. So we have seen currently a slowdown in discretionary spends in the US. But I think you've seen some of the companies getting some large ticket wins also on the cost takeouts. So again, good cash flow generating companies, reasonable dividend yields. So again, a good defensive, I think, in that sense.
I wanted, by the way, I just want to point out that Bajaj Auto is the stock that we should really be looking at. It's up almost 4% right now. It's a fresh high that Bajaj Auto is sitting at. And, you know, Nimesh was telling us about how BofA Securities has gone ahead and upgraded Bajaj Auto and talks about how now Bajaj Auto has surpassed that 5,000 rupee mark, fresh record high there, and how most of their businesses now are firing on all cylinders and they're looking very good, even in, you know, the premium motorcycle space, the EV space. They're picking up quite a bit of pace there. I wanted your thoughts here, because this whole electric vehicle space has blown up, right, in the last couple of weeks and months. I mean, the sector is doing well, the ancillary stocks are doing well. Most of them are at all-time highs, whether it's M&M, Bajaj Auto, even the ancillary guys. Is it too late to enter here, or do you think there's more to go?
So auto sector has done fairly well in the last 1 year, right? Across, we've seen a good recovery there, especially in, say, commercial vehicle. It was four-wheelers, and now it's a two-wheeler space, right, which was kind of lagging behind. And we have seen decent, and again, the stocks, especially in two-wheelers, were fairly reasonable. They were not really that expensive. So I think, and again, the only challenge was the disruption, right? More so in the two-wheeler space, because that's where the adoption of EVs has been much faster. So I think, but now probably the landscape is getting more clearer, right? Which are the players which have got space also in the electric vehicle space, and market is trying to distinguish that in the marketplace. So Again, on the auto sector, I think we think that the valuations there, right, are now pretty much factoring into that. Now it will be more of a steady compounding there, right, in terms of how the volume growth is going to be, where the market share shifts will be. I think that will drive
some
the
of these stocks like Bajaj Auto, for example, valuations are still not much higher than what their historic mean is. So do you think in that sense there could be more headroom?
So stocks like two-wheelers is the only sector, right, within the whole auto space is where it is still reason because of, as I said, the disruption fear, right, which was there on the electric vehicle side. And then others, some of the players have got a large amount of exports, right, which is there. So the outlook on exports there, right, is also important in terms of sometimes exports can actually balance out, right. In the domestic market, you might be losing, but exports could be doing better. But I think the companies which are able to really transform and able to have, say, even the electric EV space, to that extent, they are hedging, right, in terms of trying to protect their market share. And those are the companies, I think, which one would like to bet in the auto sector.
Mahesh, I think the million or billion dollar question that's on everyone's mind is that why have banks gone quiet? I mean, now the bank index is more or less moving in line with the Nifty, but we haven't seen that, blue-blooded leadership that this market is used to every time it hits a new peak. That's not happened this time around. What's the chatter that you hear among, large, investors, your peer set when it comes to picking bank stocks? Why aren't we seeing that gold rush that is usually the norm with every rally?
Yeah. So I think banks, I would say is slightly over-owned sector, right? So it's been fairly overweight. Most of the domestic as well as we see foreign will be slightly overweight. So that's one of the technical reason I would say. But apart from that, I think banks had a very good run last year in terms of earnings growth. Because last year they saw a large improvement in their net interest margins when interest rates came down, right? So now when interest rates have peaked out and your cost of funds are going up, so you would see this year will be a period of consolidation where your NIM will probably compress a bit.
So consolidation of earnings or consolidation for bank stocks?
No,
because that has a market connotation.
So one is consolidation earnings, right? So which automatically means some amount of... But I think banks offer the very good risk reward at this point in time because the credit growth is still fairly good. I mean, we were expecting that this year credit growth will probably come down because nominal growth is much lower, but it's still fairly good. The credit cycle is still behaving well. I mean, the corporate side is really very benign. On retail side, there have been some murmurs that unsecured lending is seeing a very strong growth. So RBI has also cautioned a bit, but we don't see any real fears at this point in time. So I would say that rather than within the banking space, the shift is slightly more towards NBFCs because going forward, NBFCs will now see a margin expansion because as rates have peaked out and whenever rate cut happens, you will see that play out in the NBFC sector. So that has actually some money has moved to the NBFCs and they have done much better in the last 3 months.
All right, Mahesh, thank you so much for joining us here in the studio. Have a great weekend and thanks for speaking to CNBC-TV18.
Thank you. Thank you.
Okay, well, for the market, it is holding up, but it's not really building onto its gains. So that seems to be the problem now. The Nifty holding at 20,100. The mid-caps are not doing badly at all. Little bit of tapering off of gains, but nothing alarming in the frontliners. Finolex Cables has been one of the strongest stocks in the last 1 to 2 years. This whole home improvement theme seems to be working for the company. As we know, real estate, has the entire sector has been booming as well. And the cable and wire industry continues to see healthy traction due to increasing housing and infrastructure activities. Deepak Chhabria, the managing director at Finolex Cable, joins us now. Mr. Chhabria, thanks a lot for joining us on the show. In Q1, there was almost a 30% volume growth that your company saw. How is demand shaping up at the moment? And, some of your competitors have done 50 and even 60% volume growth. Do you have similar scope?
The business is doing good. Volumes are increasing in this year. There is good demand in the market. We are basically a wire company, though we make cables, but wire is more than 80% of our business. And hence, we are driven more by the real estate sector. And that growth is coming well for us, and hence you see the volume growth of what you just mentioned.
Okay, what will be the volume growth for the year, FY24? Could it be 30% or maybe even higher?
Normally, we don't give forward-looking statements, but if you look at last year, we grew about 19% last year in turnover and about 24% in profits. In the first quarter, we've grown 19% again compared to last year first quarter, and a 38% increase in profits. So we believe the trend will continue, and I hope it gets better.
So you've taken 3 price revisions in the first quarter. Could we expect more in Q2? Have you done so already, and should we expect anything?
There have been some price decreases, and this is because the copper has dropped down, and which we stay with the market and change the price, copper being the main raw material input for our wires. And I think copper is steady now. It's been steady relatively for a long time. It's around $8,300 on the LME. And looking at the international demand, I think it'll remain steady going forward.
Okay, all right. What is the capex plan then, if you can tell me that, for the next, say, 18 to 20 months? What is the peak revenue potential based on your capex plan?
We have 500 crores marked as capex for the next 18 to 20 months. We are committed to projects in fiber optic, wherein we are growing the cable capacity from 8 million to 10 million fiber kilometer. Bulk of the capex, about 300 crores, goes in the fiber optic business.
Okay, Mr. Chabria, just to talk about the peak revenue potential as well, considering that you'll be undertaking some capex, what is that potential and what kind of asset turn do you see?
We believe in the next 18 to 24 months, we should be seeing a revenue growth of 2,000 crores. Some of it is because of this capex, and as I explained, when some of it will add more profitability in the company, like in the preform, when we go backward integrated, it won't increase turnover, but it will increase, it will stop us buying preforms and hence capture the value add in the company.
What kind of potential do you see in communication cables segment, both for FY24 and in the medium term?
We last year grew 50% in the communication sector. Fiber optic is a large chunk of it. But we are growing in, we make many products in communication, like we also make LAN cables. Now, LAN cables capacity, we've grown nearly 100% every year for the last 5 years. We've grown in CCTV cable. So there are other product lines in the communication sector which are also doing well. But fiber is the main focus.
So can that 50% growth be replicated in FY24, you think?
It can be. If the BharatNet project comes through, it can be. It's a matter of timing.
So you can replicate that growth in FY24. You're also scaling up your FMEG business. And, this is a space that's growing very fast. We were just talking to RR Kabul as well, the company that is in the same space as you. And they spoke about how FMEG is also a growing opportunity for them. Tell me, what is the revenue potential there and how much would you want to scale it up?
We intend in the next 2 to 3 years, we should do 500 crores in this segment. And there is a potential for each segment itself over the long run, let's say 5 years plus, to reach 500 crores individually in its own capacity. So our goal is long term. And that's how we are building up the range. We are expanding our distribution network to make sure the penetration is there for these kind of products. For example, we've changed from a single tire to a 2-tier network. The single tire network was our depots servicing channel partners or large shops directly. In a 2-tier network, we have a distributor and a retailer. So in this way, you can get to smaller shops, and the distributor services about 300 to 400 retail counters. And we can penetrate even into the B and C class cities quite effectively. So we've, in the last 2 years, added about 2 lakh retail counters to our network. And hence, this will take us in the journey for FMEG growth going forward. The other thing we've done is we have roped in Karthik and Kiara as our brand ambassadors, and we are doing a lot of TV advertisements to create a product pull. And I think this will also help us reach our destination for a 500 crore turnover for each product segment in the long run.
Yes, yes, lots of marketing activities. We do see those ads. Finally, Mr. Chabria, I mean, you're almost at this very important milestone of 5,000 crores revenues. What about the next one? When do you see yourself reaching 10K? Is there a roadmap that is in place?
We are looking at standard wire and cable growth going forward because wire and housing is where the main consumption is. Housing has a great potential for the masses going forward. So we every year keep adding capacity in our plants, balancing capacity, and keep growing that business, which will continue growing going forward. In the power cable segment, we are also trying to grow. We have tied up with Sumitomo, and we are providing an end-to-end solution, which is going from 1 kV all the way up to 500 kV. We are probably the only company in India which can make 500 kV cables, and we are the only ones who supplied 400 kV in the market. So being a quality product, we are looking at luxurious buildings and places to supply. Now, in the FMEG segment, we will keep growing, and as I explained, we intend to target 500 crores in each segment going down the line. So let's say if you put all together, in the next 5 years, we should be crossing 10 to 11,000 crores for the company.
Okay, that's a very ambitious target, 10 to 11,000 crores of revenues in the next 5 years. Got that. All the best with your plans, and you've been a big wealth creator for investors as well. Hope you continue to do that. That is Finolex Cable. Just pull up a 1 to 2 year chart, and you'll see the kind of momentum we've seen in some of these stocks that benefit from this whole home improvement theme or the real estate boom. Look at that, 130% in the last 12 months. Let's slip into a quick break. On the other side, Sanjay Kumar Jha, the chairman and managing director at Mishra Dhatu Nigam, will be joining in, another big buzzer lately. After that, we'll also be joined by Gautam Seth, the joint managing director at HPL Electric and Power, and Harshvardhan Dole, the vice president institutional equities at IIFL, to discuss opportunities in smart metering. Stay tuned.
Welcome back. The market's holding well, and the one stock that's literally running away on the large cap screens is Bajaj Auto. Take a look, 4.5%. What a move. Actually, Hero is keeping it good company. I mean, these two-wheeler stocks, Eicher as well, they are just roaring away. Two-wheelers, it seems off on a long ride for the weekend. That's Bajaj, Eicher, TVS, Hero Motors and Eicher, all of them doing very, very well this morning. What's also been doing well is the mid-cap space, and the next company on our radar is actually from that universe. I just want to pull up the one-year chart first before we tell you more about it. Mishra Dhatu Nigam is the next stock and the next company on our radar, and it's been a phenomenal year for Mishra Dhatu. After many years of not getting any acknowledgement from the stock markets, this has been the journey in just the last 4-5 months since April. I mean, 100% up already. So what's powering it, and what's the latest buzz? Of course, we know that Midhani, as this company is also called, successfully launched Aditya L1, first solar mission, and Mishra Dhatu has contributed to this crucial project. Not just this, even Chandrayaan, our historic touchdown on the moon, it was a lot of the alloys, cobalt, nickel, and specialty steels made by this company that were all contributing to these critical missions. Well, we have the managing director at Mishra Dhatu Nigam now joining in to talk about this. Sir, great to have you on the show. And really congratulations on all the fantastic work that you have been doing and all these historic missions that you're a part of. We just want to start by understanding the implication for revenue. So if you could tell us right now, whether it is Gaganyaan, Chandrayaan or, Aditya L1, what is the contribution from a lot of these space programs from all the work that you're doing for ISRO? How much is that contributing to your top line? And, what's the margin in that sort of a business?
Yeah, and first of all, for all entire ISRO program, Mishra Dhatu Nigam Limited is contributing right from the starting of the ISRO mission, and we have been developing a lot of new grades, new type of alloys for these requirements. And you can see in the Chandrayaan 3, of course it was right from the Chandrayaan 1, 2 and 3. So all the launches which we are seeing in the country going for PSLV and GSLV, our contributions as a material supplier has been very critical right from the beginning, and that's why we say today our entire space program is Atmanirbhar because of Midhani's contribution in their critical components, assembly and sub-assemblies. Now coming to the whatever we are contributing for this ISRO, if you see our last 3 years, our contribution and in our top line, basically will be almost covering around, it is fluctuating between 40 to 50% of our revenue coming from the space. And gradually, since already we have completed the entire supply right now, probably this year it will be coming to almost around 30%. And we are also waiting for their new projects to get sanctioned. And then again, we'll be participating in that this revenue journey of the ISRO. And
Mr. Jha?
Right now, we are also having, yeah.
Sure. I just wanted a number to that, please, if you can help us. Currently, I think your order book as of July was about 1,400 crores. What kind of additional incremental order visibility do you have, and when would you hope to execute these orders?
Now, this year, so far, we have booked around 600 crores order already booking we have done. And we are expecting another 600 in this year, plus 600 plus in this year. And we are also targeting our revenue for this year in the range of 1,200 crores. So this will be our the picture for this year. And in this journey, in fact, in our revenue, the defense will be having the major contribution because our order book for the defense sector has gone up. So this is going to contribute in the major way. But for the space, we are now looking for many new developments which we have done recently for the new alloys and new products, which I am expecting it will be coming in the future.
No, Mr. Jha, sorry, got that. When you're saying 600 bookings is what you've done into FY24 already, my question was more about execution. We know how much you've booked so far, but in terms of execution, how much will you be executing in FY24 and 25? And this 1,200 crores of revenues is in line with the 20% growth that you spoke about, right, for the full year?
Yeah. What I was telling that this year we are targeting a revenue of in the range of 1,200 crores. Will be companies targeting that. That is our
with 40%, Mr. Jha, 1,200 crores full year top line expectation, and you said 40% is coming from space/ISRO. 60% would be defense. Is that right?
Yeah, but in fact, it will not be 40 exactly. It will be coming less than that. 40 was previous year. This year it will be around 30 because since our volume means extent of revenue has gone up. So percentage wise it will be less, but the value wise it may be similar to that whatever we have done last year.
So Mr. Jha, hi, good morning. Prashant here. For the last in FY23, 22, 21, revenues have been between 800 and 900 crores, right? So is FY24 in that sense the breakout year? So from about 870 crores you moved to 1,200 crores this year, and will we continue to see this kind of growth in the coming years? Or this is kind of 1 year because of the order intake, execution, etc.? Is this a one-off, is what I'm trying to understand?
No, we see what our growth of our revenue depends on that. What is our capacity for getting the production? So if you have monitored our company's capex infusion of last 5 years, we have almost commissioned our equipment costing around 700 crores of capex already we have commissioned. I think those areas I am expecting the more revenue. It is not because of the existing one only. So whatever we have done the additional capacity, and also we did some diversification of our portfolio in terms of armor products. I think we are expecting the revenue coming from those areas, and I am sure that if you see our when we are coming for the next financial year for our results, definitely you will see that major contribution will come from our new facilities which we have commissioned recently.
So what is the the maximum revenue that you can make from your expanded capacity?
this is coming as a product mix. If you see last year, it was around 900 crores, but this I am expecting additional 300 crores coming from the additional facility which we have added. But the potential is also it is having more. We are trying to add further some of the augmentation of the facilities, and it will be increasing. It will be giving the increased output in the future. So we are targeting. We are in line with the Defense of Ministry this target for going to that almost 20 to 30% growth every year. This is the target by Ministry of Defense, and Bidhani is also targeting.
Mr. Jha, got that. That gives us clarity on your top line ambition and your top line expectations. Let's just quickly talk about margins as well, because you've been around this 30% handle, I think, for the last couple of years. As you're doing all of this, highly specialized work, do you have any scope to increase margins at all?
If you see our margin today, 35%, 30% is quite high. And since we are entering in the more and more volume, and many of the orders which we are going to get is from competitive bidding. So once you are entering in that domain, definitely we have to see that margin will be, there will be pressure on the margin. Nevertheless, we are having the mixed of the products. Some product we have the more margin, some we have the less, so we have to balance. And the company will be trying to reach in the same range what we have done in the previous year also, and of course in the last 4 or 5 years. So our target is that.
In the same range as the previous year. Got it. Sir, sorry, we're actually running out of time. I just want to focus on one last question. Earlier, I think when we spoke to you, you said that there could be an OFS likely this year itself, in this calendar year. Can you give me an update on that? Anything on the horizon?
OFS is not directly handled by us. It will be done by the ministry. And there's a plan is there, but I don't know what time they are going to announce this. But it is in the offing from last couple of years, but it has not been materialized so far.
Anything in this calendar year, you think? I mean, as per the discussions that you folks have had?
We have no idea on this issue, and probably it is under consideration by the ministry. DIPAM is looking into those aspects.
All right. Great speaking with you, sir, and hope we have the opportunity to kind of connect regularly with you. Appreciate you joining in, and congratulations on the very strong performance that you're expecting this year. Stocks, of course, done very well. But from one winner to another winner, different space, but this is the power space we are talking about. Now, the government targets to roll out 25 crore smart meters by FY 25. The revamped distribution sector scheme has a total outlay of 3 lakh crore rupees over 5 years. The opportunity is very large. The runway is large. Stocks have done very well as well. We have Mr. Gautam Seth, Joint Managing Director at HPL Electric, joining in. We also have Harshvardhan Dole, Vice President, Institutional Equities at IIFL, joining in. Harshvardhan, of course, wrote a report on this a couple of months ago in terms of the large opportunity that the sector provides. Mr. Seth, great to have you with us here. Good morning. Thanks very much. Prashant this side.
Yeah, good morning.
So, the opportunity, I think, is now well understood, but a fair bit kind of depends on execution. Just a couple of numbers if you can give us. What is HPL's sort of installed base of smart meters now? What is the capacity at HPL Electric? And how will these numbers sort of progress as we go forward in FY24 over FY23, FY25 over FY24? Will we see a big step up in these numbers?
Yeah. Good morning, Prashant. If you see our capacity, we are well over 1 crore meters per annum. And in terms of the installed base, if you look at the installed base from over the years, it is probably runs into a couple of crores. I probably don't have the number immediately. But if you see HPL Electric's execution and the order book over the last even the 4 to 5 quarters, that has been going up. And as we speak today, we are currently sitting on almost 2,200 plus crores of orders. The execution is also increasing on a a quarter-to-quarter basis, and so that is how we have been seeing the movement of the execution and the orders. Going forward, definitely we are going to see a huge increase in terms of revenue and our installation base, because most of these orders which have come in have been in the past 3 to 6 months, and in the orders under the RDSS, the AMISP orders are, they do require almost 6 to 9 months before the installation starts. So a lot of these orders which were received are today either under production or they are starting to get installed. So we definitely would see a much larger volume in terms of executions as we go forward.
Okay. Harshvardhan Dole is also joining us to discuss more about, the role that smart metering is playing in the entire ecosystem, as well as how the orders are surging. Harsh, thanks a lot for joining in. If you can just start, for the benefit of our viewers, explain what is the opportunity in the smart metering sector over the next couple of years. How do the economics work at the moment? And how does this help, the current players in the ecosystem?
Hi, good morning. I think the opportunity is quite significant. If all the state discoms were to switch to smart meters, I think the opportunity could be well in excess of 25 crore that has been talked about. And it basically could come in two forms. One is the discoms doing the capex on their own, which seems quite unlikely given their weak financial health, and therefore they call in for competitive bids and procuring meters, and they paying basically on a monthly basis. In my opinion, this is a model which is largely being explored by the private sector, and if it works out, it will be a great win-win for the private sector as well as the discoms as well as the consumer. I think it will be a stepping stone to turn around the whole sector, because then the whole data management will be in place, and somebody who's quite mischievous in not paying essentially bills quite be monitored, and hopefully the discoms can take corrective action to plug off the power supply. So this is a good stepping stone, but I wouldn't say the ultimate one, because the smart meters ought to be, supplemented with prepaid features so that the working capital issue encountered by the state electricity board can be addressed once and for all. So I hope states take cognizance of that.
Okay. Mr. Seth, comment on your experience so far. You've also, gotten into a tie-up with a company known as Wirepass. Pardon my pronunciation, right? So I just want to understand from the HPL Electric standpoint, what's your game plan for smart meters? I mean, will you bid for contracts directly, or will you in turn become a vendor for those like Tata Power who might be bidding? And in this entire value chain, I mean, what's the value creation for you? In terms of profitability, in terms of just, what's the revenue potential from the smart metering business?
Yeah, so if you look at it, in the past, in the immediate past, our focus has been to, be one of the leading supplier of smart meter to all the AMISPs. And that is what our main forte has been. Our preparedness for, in terms of R&D and in terms of all having our complete preparedness on the resources in terms of infrastructure has already been completed. Now, looking at the way, so that is the primary objective and the opportunity what we see. Apart from that, the smart meter opportunity is also throwing up a lot of new opportunities which come into in the whole in the ecosystem, and the communication network is again one of the very strong part of the complete AMISP rollout. And
so, Mr. Seth, can you put a number? Yeah, we're a little short on time, so I mean, some numbers would help. So our tie-up with Wirepass has been that we have today a very strong technology of the RF mesh coming in. They are providing the software stack. Our, with our resources and the integration, we can be providing the communication technologies as well along with the smart meter. So that makes us again looking at the ecosystem in a bigger way. In terms of numbers, definitely, we are sitting on almost over 2,000 crore orders, as I said. Going forward, on an immediate basis also, we do look at almost a similar kind of orders to come out, because the opportunity, as Harshvardhan said, is huge. And
we definitely will look at a.
No, and what revenue does it translate into? 2,000 meters, yes, but I mean, we are not aware of pricing dynamics, etc. Ballpark, yes. What's the revenue you can make from smart meters this year and in FY25?
So this year, I think combined, if you look at, I think anywhere it can be over 1,500 crores or even 2,000 plus crores going forward in the immediate 1.5 2 years.
Yeah. Okay. Sorry, 2,000 crores overall company revenues in FY25.
No, so we, I would say in this year we are looking at anywhere between 1,500 to 1,600 crores for this current year. But the next year, beyond that, we will see more of the schedules for the smart meters kicking in. And that is where we see again an upside. So it could be 1,800 or it could be 2,000. But definitely, in terms of all our businesses, we would see an upside going forward.
And margins will stay around this 12% zone?
No, the meter margins, the EBIT margins are around, you can say maybe 13 to 14%. But on an at least on a short-term basis, we would see the meter margins start going up as the smart meters become a much higher, proportion in the total order execution.
So, I just had one question. You said earlier that you have a capacity currently, I think, of 1 crore meters, right, per annum. And you have, of course, this opportunity, 2,000 crore order book, etc. Can you tell me if there is more capex that you plan to put on board to up your capacity? And if yes, what is the kind of investment that you will make in capex over the next 2 to 3 years? Would that mean any pressure on your balance sheet?
No, in fact, if you see, since the last 3 to 4 years, our capex and preparedness has been there. And we have, in fact, been waiting for this kind of an opportunity, which has come now in the last 8 to 9 months. But despite that, when we see the rollout and as more and more meters are getting executed, we have been investing we have been expanding our capacity because this is a flexible capacity in a way that recently we've just upgraded our electronic section in a bigger way to enhance, to bring in faster productivity and much more better automation. So a lot of work in our factories is going on the automation to bring out much faster, better products with the minimum resources. So a small, I would say, more of a maintenance capex has been going on, but the large capex and our preparedness, as I said earlier, has already been done to exploit the opportunity which would roll out in the next 3 to 5 years.
Harshvardhan, very briefly, we're in an election cycle, right? And power is a hot subject there. Is there any risk of derailment? Not just this, but I mean, because we've been seeing a thrust towards reforms in the power sector, or is that not a risk? This is what we've started on will continue to stay on this path. Harshvardhan?
I think this time the structure of reforms is quite different. This time states have to perform in order to get incremental grant, and essentially fungibility of funds does not exist. And to that extent, the seriousness is very different than what we have seen in the earlier cycles. So I would expect the momentum to continue. It's just that, the state level politics is quite different than what center envisages. And that is what the cause of concern is. I mean, I'm sure you would have read in several newspapers that one of the southern states, the center says is basically on the brink of bankruptcy. If that is the case, then, such reforms will get paused. And I hope center and state will work together so that these reforms can be taken to logical conclusion. Otherwise, as such, it is quite a sensitive issue when it comes to election year.
All right, gentlemen, we'll leave it at that. Thanks a lot for joining us and talking about the smart metering opportunity for the entire sector as well as, for your business, Mr. Seth. All the best. Let's take a quick break. On the other side of the break, Brent crude prices continue to be at 10, 11-month highs. Brent is now at $94 a barrel. More on the commodity markets with Manisha Gupta in just a bit. Welcome back. The big low has been the surge in Brent crude prices on account of supply pressure globally. Manisha Gupta is joining in now to talk about that and more. Manisha, what's the one commodity that you're tracking today?
Oh, absolutely, crude oil prices, because, until now we were tracking the Brent, which has been holding above $90 a barrel, but you have the WTI crude price is also trading above 90, and Brent is at 94.5. It has been a gradual but one-way direction for the crude oil prices, which has been on the higher side. So we are trading at a fresh 10-month highs for the crude oil prices. This is going to be the third straight week that you are looking at gains coming in for the prices. And when you look at the kind of gains that we put in for this week is about 3%. On a monthly basis, we have seen strong gains come in for the crude oil prices to the tune of 15%. And since the month of June, we are up 15% as well. For the year, for now, we are now up nearly by 13%. So positive cues coming in every chart that you see, near term or a longer term for that matter. If you look at the prices in this year until now, we started the year slightly on the weaker side at around $82. The reason that you have seen strong run up in crude prices also is because in the last 2 or 3 weeks, every data that you pick up, there is a strong hedge fund buying coming in for the crude oil prices. Also, additional to that, the China cutting its RRR by 25 basis points for a second straight time in this year is also supportive. China clearly has been importing a lot of crude, even as the economic data number has been on the weaker side, but the Chinese import numbers have been positive, and with this now push coming in, you are looking at even higher prices expectation. As I was saying, if you look at this year, we started this year with 82, saw a decline up to 70 in the month of June, and we're trading at $94 right now. So from June, the run-up for the crude oil prices have been quite strong. This also is a period that we have seen OPEC and allies, especially Saudi Arabia and Russia, continue to talk about output cuts, and they have actually managed to bring the crude prices to 90. The major run-up in crude actually has come in these 3 weeks, where we saw the prices gain up from 82 to 94. This is the fourth quarter estimate, and this is the number that the crude prices really seem to be surging on right now. The output cuts, the supply concerns, the strong demand expectations mean that by the fourth quarter of this year, we could be looking at a deficit. Now, this is the deficit estimates that various agencies have put out, and most bullish clearly coming in from OPEC there. We also are looking at strength continuing because the demand estimates have been on the stronger side as well. So for 2023, the demand estimates feature between 1.8 to 2.4 million barrels per day. But whichever way that you look, it's more than 100 million barrels per day of a day consumption that the global market seems to be looking at, and that clearly has been supportive. Let's take you to the forecast then, and 94, 95, 100, 105 is what we've heard from Saxo, Probis, Goldman Sachs. They're all bullish on crude oil prices, and they have been. I mean, these are forecast as long back as the month of June and have continued to hold on these levels. 90 to 95, 90, Bank of America, fat profits. Wood Mackenzie believes $88 a barrel, but Wood Mackenzie on CNBC-TV18 also told us that they could be looking to change this, revise it on the upside there. The least of bullish actually have been coming in from Indian brokerages, though. We have seen them come out with levels of 88 to 98 on the higher side. Having said that, the markets do believe that we are overbought as far as crude prices go, but the momentum still continues on the higher side.
Okay, well, Manisha, thank you very much for that. The PSU banks are the ones which are once again roaring. So you look at names like Central Bank, UCO Bank, Indian Overseas Bank, huge volumes and straight 4 to 5% gains on all these public sector bank names. The index, the PSU Bank index itself has cooled off a little bit, but it's still up 0.5%. So that's just something I wanted to point out. But it's a very buzzing market, 3:1 advances to declines. Broader markets once again outperforming what the Nifty is doing. We'll take a quick commercial break here. On the other side, our special segment, Indianomics. Lada will connect with Mridul Sagar, former executive director at RBI. Sajid Chinoy, chief economist India at JP Morgan, also will join in, and they'll discuss the 15 years post the Lehman crisis and the 10 years after the taper tantrum, where we're at. Stay tuned.